Are you ready to be plugged in, Andy?
Yes. Take me to the funnel.
Very good. Now follow me, sir.
Welcome back, InfoNauts. Today, we're diving deep into a massive $21 billion opportunity that could reshape the future of energy in Europe, and why it matters big time for Plug Power. What exactly is this green hydrogen gold rush? Who's behind it? And why is Plug Power in the right place at the right time to benefit? In this video, we're exploring what this opportunity really means, why governments are backing it with serious funding, and whether Plug Power is poised to ride the wave or get left behind. Let's break it all down together. Plug Power's CEO Andy Marsh has highlighted a massive pipeline of green hydrogen projects in Europe, describing an active electrolyzer opportunity funnel exceeding $21 billion for 2025 and 2026. This refers to the cumulative value of potential European deals for Plug Power's electrolyzer technology, the systems that produce green hydrogen from water using renewable electricity. The opportunity has been spurred by Europe's strong policy push for hydrogen, between the EU Green Deal, the RePowerEU initiative, the EU's plan to cut dependence on Russian fuels, and national laws like the UK's Energy Act 2023, Europe has created an unprecedented demand for electrolyzers. What makes the current cycle unique is that European governments are backing up their hydrogen ambitions with enforceable mandates, funding incentives, and penalties for missing targets. In this environment, Plug Power, a US-based hydrogen company, has moved early to establish a foothold. In another video I posted to my YouTube channel titled Plug Power's 2025 Quarter 1 Earnings Call, the textualized version, Andy Marsh had these things to say about Europe at about 5.5 minutes into the video.
Before I turn it over, let me frame one of the most exciting strategic frontiers, Europe. Between the EU Green Deal, RePowerEU, and the UK Energy Act, we're tracking an electrolyzer opportunity funnel worth over $21 billion across 2025 and 2026. What is different now is not just ambition, but enforceable procurement mandates, funded incentive schemes, and penalties for non-compliance. Plug has moved early and decisively in the region, and we're already embedded in some of the most transformative hydrogen projects across Europe. I'll let Jose walk through these specifics, but I'll close with this. Europe is real, the funnel is live, Plug is in position.
Europe is real, the funnel is live. Plug is in position, emphasizing that Plug is already embedded in many transformative projects across the continent. The timeline for these opportunities is near term. Many projects are slated to reach final investment decisions or break ground in 2025 and 2026, aiming to come online by the late 2020s to meet Europe's 2030 climate goals. Going forward, we will break down the key projects, countries, and partners contributing to this $21 billion pipeline and how Plug Power's technology and strategy position it in Europe's green hydrogen race. Projects and deals comprising the pipeline. Denmark, the 300 megawatt sustainable aviation fuel project. One major opportunity in Plug's funnel is a 300 megawatt electrolyzer project in Denmark intended for sustainable aviation fuel, SAF. This project would use green hydrogen to synthesize jet fuel, helping decarbonize air travel. Andy Marsh indicated that Plug is pursuing the Danish SAF project as a significant anchor in the aviation sector. Although the specific project name wasn't stated, it aligns with Denmark's push for e-fuels. For example, the Copenhagen Area Green Fuels for Denmark initiative. A 300 megawatt electrolyzer supplying a SAF facility would be among the largest of its kind, underscoring the scale of Europe's aviation mandates. In fact, under EU law, Fuel EU Aviation, airlines must start blending increasing shares of SAF into jet fuel, backed by penalties for non-compliance. This regulatory pull is driving projects like the Danish one to move forward on tight timelines. Plug Power's GenEco PEM electrolyzer units, which come in modular 5 megawatt containers, are well suited for such industrial scale deployment. By securing this Danish project, Plug would not only book a large order, but also showcase its technology in producing e-kerosene for aviation, a high-profile use case. The project's timeline likely targets operation around 2027, in time to supply SAF for meeting EU blending targets toward 2030. Plug's involvement at the pre-award stage suggests it is positioning to be the electrolyzer supplier if and when the project reaches final investment decision. France has also emerged as a hotbed for sustainable aviation fuel projects that need green hydrogen. In April 2025, the French government selected 4 major e-SAF projects under the Carb Aero call, providing about $100 million, roughly $25 million each, in funding for their engineering and design. The aim is to produce synthetic jet fuel from captured CO2 and hydrogen by 2030, and the 4 winning projects are led by some of France's biggest energy players, which comprise of the company, ENGIE, Cryogenic in Le Havre in northern France, the company, EDF, Hynamix, Take Caire in Saint-Nazaire, western France, the company, Verso Energy, Désir in Rouen in northwest France, and finally the company, Elise Energy, BioTjet in Lac, Pyrénées-Atlantiques in southwest France. These projects together aim to produce 270,000 tons of SAF per year by 2030, cutting aviation CO2 emissions by an estimated 750,000 tons annually as stated by hydrogentoday.info's website. Plug Power is actively working with all 4 teams as the prospective electrolyzer supplier. In other words, Plug's PEM electrolyzers would provide the hydrogen for these synthetic fuel plants. The French government's support for pre-FEED feed studies de-risks the projects and makes it likely they will move to construction in the next couple of years. This is a prime example of Europe's policy translating into real investments. France's 2030 plan and the EU's RefuelEU aviation mandate require a ramp-up of fuels. By being involved early, Plug Power stands to win contracts as these SAF plants go forward. The timeline here spans now through 2026, engineering phase, and later 2027 through 2028 for construction, with full production by 2030 to meet the EU's targets. If Plug secures these deals, they would contribute significantly to the $21 billion pipeline, given the hundreds of megawatts of electrolyzers likely needed across all 4 SAF projects. Spain represents one of the largest pieces of Plug's European funnel, thanks to the country's aggressive hydrogen strategy. Spain has set a goal of installing 12 gigawatts of electrolyzer capacity by 2030, and it recently approved $1.2 billion in grants to kickstart 7 regional Hydrogen Valley projects totaling around 2.3 gigawatts of electrolysis capacity. These 7 green hydrogen hubs are spread across regions including Aragon, Andalusia, Castilla y León, and Galicia, among others, and will supply hydrogen for industries like refining, fertilizers, steel, methanol, and fuel production. Plug Power has disclosed that it is actively engaged in multiple of these Spanish cluster projects. In practice, this means Plug is likely bidding to supply electrolyzers or partnering with the consortia developing the hubs. The company noted that European funding programs now include mandatory procurement scoring criteria that favor vendors who offer full lifecycle support and local capabilities. This works to Plug's advantage, as it has established engineering teams in Europe and offers end-to-end service, engineering, manufacturing, and 10+ years maintenance. Plug's long-term service model can lower the levelized cost of hydrogen, LCOH, for these Spanish projects, strengthening its bids. In addition to these future clusters, Plug has already secured some significant Spanish projects. Notably, BP and Iberdrola chose Plug Power to supply a 25 megawatt PEM electrolyzer system for a green hydrogen plant at BP's Castellón refinery in Valencia, which is the largest green hydrogen project in Spain to date. Plug is delivering 5 of its 5 megawatt containerized electrolyzers to this project, which will produce about 2,800 tons of H2 per year and help decarbonize the oil refinery's process. Construction for the Castellón plant began in 2024, with the electrolyzers arriving on site in late 2025, and operations expected by the second half of 2026. The project received a 15 million EU grant and involves an investment of over 70 million jointly by BP and Iberdrola. Plug's CEO hailed this deal as proof of its established industry expertise and proven technology in Europe. Furthermore, Plug has a smaller contract in Spain supplying 5 megawatt electrolyzers to Iberdrola and Fertiberia for green ammonia fertilizer production, a project in Puertollano launched earlier, and a 25 megawatt system for Iberdrola and BP's Castellón. Spain's pipeline for Plug thus ranges from 5 megawatt modules up to hundreds of megawatts in the upcoming hydrogen valleys. These projects have staggered timelines, some, like Castellón, coming online by 2026, and the large 100 to 500 megawatt clusters aiming for a 2027 to 2028 completion to utilize Spain's recovery funding deadlines. Portugal, Galp's 100 megawatt green hydrogen refinery project. In Portugal, Plug Power's headline project is a 100 megawatt electrolyzer deployment for Galp, the country's major oil and gas company, at Galp's Sines refinery. This project will generate green hydrogen to replace a portion of the gray hydrogen from natural gas currently used in the refining process. Plug has been selected to deliver this 100 megawatt electrolyzer system, positioning it as one of the largest green hydrogen initiatives in Portugal. Importantly, the Galp project has strong financial backing. It won 84 million in operational subsidies from the European Hydrogen Bank in the EU's first hydrogen subsidy auction. These subsidies will be paid over 10 years, indexed for inflation, to support the plant's operational expenditure, not just capital expenditure. This model, essentially a 10-year production credit, shows the EU's commitment to making green hydrogen economically viable for the long term. With that funding secured, Galp announced a final investment decision on the project, aiming to start green hydrogen production by the mid-2020s. Indeed, the European Investment Bank has also approved a 180 million loan to support Galp's Sines hydrogen unit and related clean fuel upgrades. Plug's role is to supply its GenEco PEM electrolyzer stacks, likely as 5 megawatt modular units, and possibly provide engineering through its European team. Plug acquired Netherlands-based Frames Engineering in 2021 to support plant integration. The Galp electrolyzer is expected to produce up to approximately 15,000 tons of green H2 per year, replacing approximately 20% of the refinery's hydrogen use. This hydrogen will feed processes like hydrocracking and desulfurization to yield lower carbon fuels. The timeline sees initial hydrogen output by 2025 to 2026, aligning with the subsidy schedule and scaling to a full 100 megawatts of capacity thereafter. For Plug, the Galp contract is a cornerstone European win, demonstrating its ability to execute gigawatt-scale refinery decarbonization when combined with long-term policy support. United Kingdom, hydrogen contracts, and electrolyzer awards. The UK is another key geography in Plug Power's European funnel, thanks to the government's hydrogen production business model, a contracts for difference scheme similar to the EU's Hydrogen Bank. The UK held its first allocation round, HAR1, for green hydrogen projects in 2023 and has already awarded $2 billion in total funding as 15-year production contracts. According to Plug, its electrolyzer technology is involved in over 60% of the hydrogen capacity awarded in the UK's first round. In practice, this means that a majority of the winning British projects, which include several tens of megawatts of electrolyzers for industrial clusters and fuel switching, have chosen Plug's PEM electrolyzers or are in advanced discussions to use them. For example, industry sources indicate that projects like HyNet in northwest England or BP's High Green Teesside may utilize Plug's systems, though specific vendors per project aren't all publicly disclosed. This high hit rate reflects Plug's strong positioning in the UK market, likely due to its ready-to-deploy 5 megawatt modular electrolyzers and prior track record. The UK Energy Act 2023 established a stable regulatory framework for hydrogen, and hydrogen allocation round 2, HAR2, is now underway with 1.2 gigawatts of new electrolyzer projects shortlisted in 2024 to 2025. Plug Power is actively bidding in HAR2 tenders as well, including proposals for both large, centralized hydrogen plants and smaller on-site, decentralized units. The total awards in HAR2 are expected by late 2025 and could exceed 800 megawatts of capacity, a potential of 875 megawatts in new awards. Crucially, the UK contracts come with 15-year fixed-price support indexed under low-carbon hydrogen agreements, which ensure bankable revenue for producers. This de-risks projects and should convert pipeline opportunities into firm orders for suppliers like Plug once contracts are signed, with its involvement in many HAR1 projects, which likely will start construction in 2024 to 2025 for operation by 2026 to 2027, and strong bids in HAR2. Plug stands to gain a sizable UK market share. For instance, if approximately 300 megawatts were awarded in HAR1, Plug Tech being in approximately 60% of that means approximately 180 megawatts of systems. Combined with potential HAR2 wins, Plug's UK-related pipeline alone could be several $100 million in electrolyzer sales. The company attributes its success in Britain to its full-stack offerings and credibility, providing not just the PEM stacks, but integrated engineering, manufacturing at scale, and long-term service, which give project developers confidence in delivery. As the UK aims for 10 gigawatts of low-carbon hydrogen by 2030, Plug's established presence through these contract rounds is a strategic foothold for continued growth. Policy support and funding driving the hydrogen boom. The enormous $21 billion European funnel that Plug Power cites is fundamentally enabled by government policy, EU funding programs, and incentives. Europe's climate policies have moved from ambition to enforcement, creating real markets for green hydrogen, EU Green Deal, and Fit for 55. The EU's Green Deal includes legally binding targets under the updated Renewable Energy Directive, RED III, for using renewable hydrogen in industry, for example. 42% of hydrogen in industry must be renewable by 2030, and 60% by 2035, according to Plug's executive briefing. This forces refineries, fertilizer plants, steel mills, and chemical producers to start switching from fossil-derived hydrogen to green hydrogen. It directly drives projects like Galp's refinery Electrolyzer and the Spanish hydrogen clusters for industry. Likewise, Fit for 55 introduced sector mandates. The Fuel EU Aviation and Fuel EU Maritime regulations set minimum shares of sustainable fuels for planes and ships, backed by fines. These mandates create guaranteed demand for SAF and e-methanol, which rely on green hydrogen, thereby justifying large electrolyzer investments in those areas, as seen with the Danish and French SAF projects. Government funding and IPCEIs. European governments are co-funding hydrogen projects at an unprecedented scale. For example, Spain's H2 Valleys program, part of its COVID recovery plan, is granting $1.22 billion to 7 hydrogen megaprojects, 2.3 gigawatts total, jump-starting regional hubs. France's France 2030 plan similarly provides grants for SAF and electrolyzer manufacturing. These direct subsidies lower capital costs and improve project economics. Furthermore, some hydrogen projects have been designated as IPCEIs, important projects of common European interest. Unlocking state aid. Plug's 100 megawatts for ArcelorMittal's steel plant in Germany, or its involvement in other consortia, could fall under this, though not explicitly cited. On a European level, the Innovation Fund has also awarded grants to electrolyzer projects, with several 100 megawatt scale winners in 2022 and 2023. Each grant or incentive improves the feasibility of projects in Plug's pipeline. European Hydrogen Bank and Contracts for Difference, or CFDs. The EU has created a hydrogen bank mechanism to subsidize the operating cost gap for green hydrogen. In its first pilot auction in the fall of 2023, the Hydrogen Bank awarded €800 million to a handful of projects, including Galp's 100 megawatts in Portugal, which got €84 million. Essentially, winning projects are guaranteed a premium per kilogram of hydrogen produced for 10 years, giving investors confidence in revenues. More EU Hydrogen Bank auctions are expected, potentially mobilizing €3 billion or more in coming years. Similarly, the UK's CFD-style hydrogen agreements provide 15-year price guarantees. These mechanisms are crucial for large-scale projects, 100 megawatts or more, to secure financing, and they directly benefit Plug by turning proposed projects into bankable deals. Plug's leadership noted that unlike in the past, now governments are funding real projects with real deadlines in Europe, highlighting a swift shift from planning to execution. Infrastructure and other support. Beyond production incentives, Europe is also funding hydrogen infrastructure, storage, pipelines like H2 Med, ports for H2 import-export, and simplifying permitting for electrolyzers. The EU's Green Deal Industrial Plan, a response to the US IRA, allows member states to match subsidies and support local manufacturing of electrolyzers. For instance, Germany and France have announced schemes to support domestic electrolyzer factories. benefiting European OEMs, but also relevant if Plug were to set up production locally. Additionally, some countries offer tax credits or usage mandates for green hydrogen. RePowerEU, in particular, set a goal for Europe to produce 10 million tons of renewable hydrogen domestically by 2030, a target that essentially necessitates approximately 100 gigawatts of electrolyzers Europe-wide. To reach that, the EU is urging faster electrolyzer build-out, standardization, and is considering regulatory measures to lower electricity costs for electrolysis, for example, favorable renewable power contracts. All these policy measures create a favorable market landscape that underpins the $21 billion in opportunities Plug is chasing. In summary, EU and national policies are not only ambitious, but actionable with funding. This combination of carrots, grants, subsidies, and sticks, mandates, penalties, has made Europe the most dynamic electrolyzer market in the world as of 2025. Plug Power is leveraging this by aligning its offerings with the programs. For example, ensuring its technology meets EU requirements for additional renewables and local content, and that its proposals tick the boxes for funding criteria. The result is that Plug's European sales pipeline is heavily bolstered by public co-funding, reducing the risk of project cancellations. Indeed, company executives noted that Europe will be a multi-gigawatt contributor to Plug's bookings and revenue in the next 18 to 24 months as these policies translate into signed contracts. Plug Power's technology, strategy, and competitiveness in Europe. Plug Power has strategically positioned itself to capture a significant share of Europe's green hydrogen build-out, using both its technological offerings and regional presence. A core element is Plug's electrolyzer technology itself. The company's GenEco PEM electrolyzers are among the largest and most modular on the market. Each GenEco unit is a 5 megawatt proton exchange membrane electrolyzer in a standard 40-foot container. The company also offers 1 megawatt skids for smaller needs. Plug is currently the only provider offering 5 megawatt PEM electrolyzers in a turnkey containerized system. This gives it a scalability advantage. Projects can install dozens of identical 5 megawatt modules to reach 100 megawatts or more scaled, reducing on-site construction complexity. The GenEco platform is designed for flexible deployment across industrial applications like refining, ammonia, methanol, and SAF production. By focusing on high-output, high-efficiency PEM stacks, Plug can serve the needs of heavy industry where reliability and footprint matter. The company has proven its tech in the field. For example, it operates a 15 TPD, or tons per day, hydrogen plant in Georgia using a 20 megawatt PEM system, one of the largest such systems in operation. In Europe, Plug set up a live demonstration hub at the Green Box in the Netherlands to showcase its 1 megawatt and 5 megawatt electrolyzers to customers under real-world conditions. This has helped build confidence among European clients. The demo site has hosted visits from Galp, Technip, Tata Steel, Siener, and regulatory bodies, and has supported ongoing commercial discussions. The ability to see a 5 megawatt system running on solar power, even taking advantage of negative electricity prices at times, demonstrates the viability and economic logic of Plug's solution in Europe's grid. Beyond technology, Plug Power's strategy in Europe has been about early investment and partnerships. The company moved quickly to establish local operations. In 2021, it formed a 50-50 joint venture with Acciona in Spain, Acciona Plug, to develop green hydrogen projects in the Iberian Peninsula. The JV set an ambitious target of capturing 20% of Spain and Portugal's hydrogen market by 2030, with an initial pipeline investment of over 2 billion euros for 100 tons per day of H2 production, which implies multi-hundred megawatt capacity. Through Acciona Plug, Plug became the preferred electrolyzer supplier for projects the JV, or joint venture, pursues, leveraging Acciona's renewable energy assets to provide power. This local footing likely helped Plug win the Galp deal in Portugal and compete in Spanish tenders. Acciona Plug itself is developing at least 2 hydrogen hub projects in Spain. Plug also partnered with French renewables firm Lhyfe in 2021 to co-develop hydrogen plants across Europe, aiming for 300 megawatts by 2025 and even a 1 gigawatt project thereafter. The company Lhyfe had already used Plug's electrolyzers in the world's first offshore hydrogen pilot, a 1 megawatt unit powered by a floating wind turbine off France, reinforcing Plug's image as an innovator. Additionally, Plug has a JV with Renault, Hyvia for fuel cell vehicles in Europe and acquired companies like Frames Group in the Netherlands and ACT Cryogenic Tech to boost its engineering and manufacturing footprint in the region. These moves show a commitment to being local in Europe, despite being a US company, an important factor as European customers often prefer domestically anchored suppliers for critical infrastructure. In terms of competitiveness, Plug Power frequently emphasizes its turnkey, full-stack capabilities. Unlike some competitors that only sell electrolyzer stacks, Plug offers a complete solution. It designs and engineers the balance of plant through frames, manufactures the PEM stacks at its Gigafactory in Rochester, currently one of the largest PEM factories globally, assembles the containerized modules, and provides long-term operations and maintenance service. This one-stop-shop model, plus having dedicated European execution teams, has translated into higher scoring on European project tenders. For instance, many EU funding competitions give weight to supplier capability, local presence, lifecycle cost, and warranty/services, areas where Plug's integrated offering excels. The company claims its service model, where it often operates the electrolyzer plant for the client or guarantees performance, can lower the levelized cost of hydrogen, making its bids more attractive. Plug also touts its experience. It has deployed over 70,000 fuel cell systems worldwide and built 275 hydrogen refueling stations over decades. While those are not electrolyzers, they signal credibility in hydrogen tech and large project execution. In electrolyzers specifically, Plug has already delivered or is delivering over 95 megawatts of electrolyzer projects globally as of 2023, including 5 megawatt systems in Europe for glass, aluminum, and steel industries. This real project portfolio gives it references that newer European startups may lack. Competition in Europe's electrolyzer market includes European firms like Nel ASA, Alkaline and PEM Norway, ITM Power, PEM UK, ThyssenKrupp Nucera, Alkaline Germany, McPhy, France, Sunfire, Germany, SOEC Alkaline, Cummins, via its Hydrogenics unit, which ironically is supplying a large Spain project, among others. Many of these are also vying for the same projects. However, Andy Marsh contends that Plug's proactive strategy has put it in pole position, with superior project visibility, regulatory fit, and delivery readiness in Europe. In the Q1 2025 Plug Power conference call, he and his team highlighted that Plug is already embedded in the most transformative projects and that its funnel is live, meaning they are in active negotiation or bid stage on these multi-billion opportunities, not just passively interested. The next 18 to 24 months through 2026 will be critical. As European projects reach final investment decisions and orders are placed, Plug expects Europe to become a major portion of its business, contributing multi-gigawatts of electrolyzer bookings and significant revenue with healthier margins. Execution will be key to maintain competitiveness. Plug is ramping its manufacturing to meet demand and localizing support to ensure it can deliver on time. In conclusion, Plug Power's $21 billion opportunity funnel in Europe is underpinned by a confluence of massive project demand and supportive policy, which the company has positioned itself to seize through early investment, strong partnerships, and a robust electrolyzer solution tailored for large-scale green hydrogen production. The projects span several countries: Denmark, France, Spain, Portugal, UK, and more, and sectors from refining and ammonia to sustainable fuels for aviation and shipping, all targeting deployment around 2025 through 2028. Plug's PEM electrolyzers will play a central role in these initiatives, providing the green hydrogen that will feed into Europe's cleaner refineries, fuel tanks of planes and ships, and heavy industries of the future. With substantial government backing reducing risk and Plug's strategic approach in Europe, the company is well placed to convert this pipeline into concrete projects. As Andy Marsh succinctly put it, Europe is real, and it may be Plug Power's biggest growth engine in the second half of this decade. Alright, InfoNauts, we've reached the end of today's voyage. We've charted Plug Power's $21 billion European green hydrogen opportunity funnel, hopping between Denmark, France, Spain, Portugal, and the UK like our own personal galaxy of subsidies, mega projects, and electrolyzers. Over the next 5 to 25 years, this could reshape entire industries, and maybe even how your grandkids fuel up, if, we survive the politics, funding changes, and reality of execution. But before we dock the ship, let's talk about the warp core cost of this mission. Holy cheeseburgers. I spent over 76 hours making this, and if I had a professional crew, researchers, writers, editors, motion designers, voiceover, project management, plus rented office space and gear, this would have run over $5,000. I do this not because it's lucrative, spoiler, it isn't, but because I love bringing you well-researched, fact-packed, sarcasm-sprinkled insights that cut through the noise. If I had a team and resources, we could launch these deep dives faster than Warp 9. But for now, it's just me, the captain, running every console on the ship. So when I ask you to like, comment, and subscribe, it's not for vanity metrics. It's the oxygen tank keeping this mission alive. Your support lets me keep steering us through the cosmic storm of clickbait and corporate fluff and into real signal that matters. Now for the official captain's disclaimer. I'm not your financial advisor, I'm your navigator. This content is for information and education, not guarantees or personal investment recommendations. What you do with your money is your choice, your responsibility, your risk. In other words, if you YOLO your life savings into hydrogen and it goes full Hindenburg, don't send me your broker's hate mail. Until next time, keep your trajectory steady, your curiosity open, and remember, in space and in investing, there's always turbulence. But the journey's a lot more fun when we're navigating it together. This is your captain, signing off.